You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again. It is time for TWIFO This Week in Futures Options, the first episode of the new year, that is 2026. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you were mainlining last year. Thanks to all of you who helped make 2025 such a great year for the network. Added 2 new shows, and if you go back a little bit into the end of 2024, we added a new futures-oriented show as well. Very much the sister program to this one you should definitely be checking out. Yet another reason why you should be listening to the full network. And of course, if you want to go above and beyond, you want to join us for the upcoming Vol Deathmatch 2.0, win fabulous prizes, live streams, great exclusives, the optionsinsider.com/pro is the place to go as we find out who's joining us for the first episode of 2026. And I have to admit, I have mixed feelings welcoming this person back on, because she is the person who knocked me out of the fantasy football semifinals. None other than Miss Carley Miss Carley Garner from DeCarley Trading. Carley, welcome back to the show, even though I still have a bone to pick with you, madam.
Thank you, Mark. It's good to be here. And, maybe I'll hang up my commodity hat and just start betting on FanDuel. I mean, geez,
there you go.
That's the only place I seem to pick the winners nowadays.
It's all one thing these days, right? I think there's going to be a lot of money spent this year and in the coming years trying to carve out that delineation between what a trade is and what a bet is, or perhaps wipe it out altogether. CME and FanDuel doing their best for that right now. Kalshi, a lot of money chasing that in the new year, Miss. I'm not sure if you heard, Miss Carley.
I have. The lines are getting blurry. I'm not sure I'm on board with it yet, but, we'll just have to take it slowly.
Of course, you got all the way to the finals, and then that other jerk, Mr. Kevin Green, took you out. What do you think happened? Walk us through the finals there. What happened, Carley?
Well, he actually it was basically he had one player that took me out. That's not true. I mean, he had a good team, obviously. Otherwise, he wouldn't have been there. But Derrick Henry blew up, and that was all it took.
It was the one week he forgot to fumble the ball.
Yeah, I mean, I think he had 4 touchdowns, and I mean, just insane numbers. So I didn't stand a chance. But good for Kevin. He deserved it.
I had one player who undercut me. He's a guy who did well for me all year, and then when I played you, Josh Allen decided not to show up. He got like 7 points, and that was I think our contest came down to like, what was it, 1.5 points, something ridiculous. So
yes,
if Josh just threw one more ball, that's all he had to do. But you know what? He decided not to that day, Carley. He said, I'm good. I'm good with my 5 passes or whatever the heck he had.
It's definitely a lot of luck. It takes a lot of luck to to make it to the end.
There is. You need all your players to be healthy, then you need them to actually show up on the day. There's a lot of moving parts, which is what makes it fun. And that's also what makes our first episode of 2026 a whole bunch of fun, because we're going to do a whole lot of moving and shaking.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down usually what's lighting it up for the past week. We're going to expand that purview right now, listeners, and go back a full year. And before we do that really quickly, Carley, before we get off the football tip, I should mention I may have mixed feelings about you joining us this week, but some of our chat were happy because there was a decided bias towards the Bears in the upcoming contest in our chat yesterday. And so they said, where's Carley? We need a Packers fan. So they asked for you and they shall receive. So there you go. You're balancing out with a little bit of cheesehead love on the show today, Carley.
Actually, I'm an avid Bears fan.
Oh, you are?
So,
I don't know. Our chat was saying you were a Packers fan. I wasn't sure about that, but I've come to trust our listeners.
I have paid my dues. Being a Bears fan for the last 20 years has been misery, just decades of misery.
That's true.
So this is my year to enjoy.
You owe it. So I apologize then for besmirching.
Okay.
I apologize on behalf of our chat. That is besmirching a Bears fan to call them a pack. I have learned that living in Chicago now for the last few decades. Yeah, the worst really thing you could call a Bears fan is a Packers fan.
Yeah, that stings a little bit. But listen, I can overlook it as long as the Bears win on Saturday.
I think it's because you're always coming on the show talking about the dairy complex. They just assumed you were a big cheesehead out there. But I have my numbers for last year. I'm going to break them down in a second. But before we do that, Carley, as you look back on the mad year that was 2025 in the world of futures and futures options, what stands out? What resonates to you, madam?
Well, I mean, this was a year of improbable events occurring. I mean, this was really a banger year for anyone that was trend trading or positioned in a way that would benefit from the unusual. And so good for them. I personally probably had about the worst year I've ever had in my career, and I've been doing this for a long time. So 2025 was not my year, but it is what it is. You can't always be right, and nobody can see the future. We always have to keep things in perspective, and it's very important to accept a humbling when you get it. And I very graciously accept my humbling.
We all have to be humbled. Sometimes it's in fantasy. Sometimes it's in life, Carley. There's a humbling waiting for all of us out there. You were expressing some reticence about the upside in metals, and last year was not the year to be. It was just a year to be the devoted follower. It was not the year to question.
Yes, it was not. It was. If I could have forgotten everything I learned in the first 20-ish years of my career, I might have been more open to that idea. But I look back and these kinds of things, like this is like a 1 in 50 year type of event that we're probably seeing in metals. Maybe this is the new normal, but I really don't think it is. I think this is just kind of the repeat of 1979, and here it is. But if I spent my entire career looking for events that only happen once every 3 to 5 decades, I'd probably feel like this most years. So I'll take my lumps, and hopefully next year's gonna be a better year.
There we go. I think it will be. Let's start by breaking down last year. Carley, would you like to do the honors, or is it too painful? You want me to do last year's numbers first?
Go for it.
Okay, I will go for it, listeners. If this sounds a little bit different, remember, you should be checking out the sister program to this one, which is, of course, the Futures Rundown. If you're not hearing some names on this show that we talked about yesterday, that's, of course, we're talking about things that lit it up at CME last year, and obviously not everything trades there. So we're talking about what trades on CME. Let's go to the light side first, because it was a pretty biased green year for a lot of products out there last year. Number 5 for the upside, listeners. For the year, this one shouldn't come as a surprise, because we talked about it a lot, especially in Q4 of last year. Certainly if you went to the grocery store last year, you felt the pain in this category. It's feeder cattle, number 5, up 36, almost 36.5% for the year. So not a welcome surprise for anyone who went to the butcher counter last year, tried to buy some ground beef, whatever the case might be on the meat side. Not a great year for that. Number 4 was a great year for the psychological underpinnings of the global economy, which is gold, up over 60%, 67%. Now, a lot of different ways you can measure this number. We're looking obviously at the futures, but of course, some people like to look at your GLDs. There are a lot of different ways you can carve up gold's performance. Either way you cut it, it was north of 60% last year, and a heck of a banger. Coming in at number 4, but still well behind number 3, our old pal Palladium, up 91%. And then keeping it in the P precious, it's platinum, 132, almost 133%. But then stealing all the thunder, Carley called it a once in 50-year event, and that certainly seems like that might be the case. It's for the big dog last year, which is silver, an absolute beast, up 140 plus percent, 146 on my list. You might have a different number if you're looking at SLV or something like that, but just a wild year by just about any stretch of the imagination. What's even wilder, Carley, is most of that move came in the second half of last year. If you go back 6 months or so, a lot of silver bulls were really complaining. They were not having a good year. They were like, how come gold is setting new all-time highs every day and silver's can't get out of its own bed? In fact, it was selling off for a little while there. So that whole move came in just a few months.
It did. It was a couple of months. And there's a couple things I'd like to just kind of mention here. People that made money on this move are not the people that came in late. It's probably people that have been this is most of them. I'm sure there's exceptions, but the majority of people that made money on this are probably people that have been holding silver for many, many years and just feeling the pain. So they really deserve this, and I'm happy for them. But I will say the crazy way that it ended last year with silver, I suspect there's something going on with the ETFs. Like there's triple reverse ETFs in silver that had almost zero volume until suddenly everybody wanted to jump on board. And I think, kind of speculating here, but it feels a lot like crude oil in 2020 when USO blew up the crude oil market. I think we're getting kind of the opposite in silver. I think some of these reverse ETFs and silver kind of blew up the market. And the reason it does that is you get all these, stock traders that are purchasing ETFs, not fully understanding the risks and what they're doing and what's going on. And that fund has to attempt to rebalance every day. And it gets really, really, really messy. And I think that played a big part in this, but it's going to be interesting to see how things go forward. And I'll just say one more thing. I don't have a list of last year's performers in front of me, but I assume it was things like cocoa, orange juice, coffee, and those names are nowhere on these lists. And if you pull up a chart, they went out of 2024 with a bang, and in 2025 they've fallen flat on their face. Unfortunately, that's how commodities work. So be very, very careful assuming that these types of trends or moves are going to continue, because in commodities they rarely do.
Yes, coffee, cocoa, OJ, all lighting up our tape yesterday on the Futures Rundown. Not going to see those today, listeners. They don't sling them over there at CME. Check out the Futures Rundown if you want the full panoply of products for the year. But Carley, so you're saying there's a reverse 2020 going on in silver right now. So instead of going negative, we're going to the moon.
Well, right. Well, I think that's probably all played out. I think anyone that participated in silver in the last couple months on both sides of the tape probably got washed out. I hate to say that, but I mean, the rally, it's moving $8 to $10 a day. That's really hard to survive. Even if you're on the right side of it, that's hard to survive. So and I assume the ETF traders are probably doing just as poorly. A
lot of the silver bulls I know have actually already gotten out, so they're kind of feeling a little bit of that FOMO now, right? They're feeling they had a great year, and they're still mad, which is always the trader's psychology, is it not? You made you had the best year you've ever had in silver, but you left a little on the table, so you're still mad at yourself. You can never win, Carley. Even when you win, you lose psychologically, which is a strange thing for traders of all stripes. Let's keep going out to the dark side now, listeners. Number 5, our old pal RBOB. What the heck is RBOB? Anyway, as we say in the intro to our Futures Rundown show, listeners, off nearly 13% for the year. Obviously, a much different bar to cross to break into the bottom 5 than it was to the top 5. You're talking nearly 3x difference, which is kind of wild between RBOB and feeder cattle in terms of percentage moves. Number 4, it's Brent. It was a rough year for energy, in particular the crude side. Brent off nearly 19% for the year, followed by number 3, our old pal WTI, off about 21% for the year. And then number 2, we were talking a lot of dairy on the show yesterday with good old Dan the Man Gramza. A complex we discovered not his wheelhouse. I don't follow it because I can't eat dairy, so I just wash my hands of all of it, but he doesn't like it either. So there we go. Not a lot of dairy love here on the network, at least so far. From Carley, she's not a cheesehead, so she doesn't like dairy either. Number 2, Class 3 milk off nearly 27%. And the big dog, the one that is the same on the yesterday's show and today, I've been saying all year long on the Futures Rundown, it is a rough year for rough rice, off 27.33%. So Carley, interesting stuff. I think WTI will probably resonate for a lot of our listeners out there, but I don't know. Maybe you've got a ton of folks who sling Class 3 milk over there at DeCarley. What are your thoughts, madam?
Actually, we do have a couple of farmer rancher type clients that do trade some milk, but I don't know of anyone speculating in milk, and that's probably the way it should be. It's a pretty thin market. But WTI crude oil obviously is a big target. It's interesting this year. In 2022, everyone wanted to trade crude oil. So like if you talk about some of the big broker dealers, they only offer the majority of futures traders are not trading with commodity brokers. They're trading with broker dealers, which are basically stock brokers that offer futures on the side. And a lot of those broker dealers only allow trading in a handful of products. They're not offering all this stuff we talk about. But what we saw from 2022 to 2025 was speculators went from all of the volume going into crude oil to all the volume going into gold. So we've just had a switch in speculation. And I suspect that we probably get without speculators, buying every dip in crude oil. We've been knocking on the door of 55 for several months now. And I think the more we knock on that, the more likely the trapdoor is to open into the basement. So I actually think crude oil may even have a worse year next year than we had this year. Maybe. We'll see. Or at least let's say the first quarter or first half of the year might be worse than what we saw in the last 12 months for crude oil.
Certainly some developments in the energy market to kick off the new year. January starting out hot, Carley. Speaking of starting out hot, let's break down that first week of the new year now, shall we, listeners? Because as I said at the end of last year, watch out. January, certainly the last 4 or 5 years, has really kind of come in like a lion. Something unexpected always happens, and we've already done that in the first week of the new year, effectively seizing the acting leader of another nation out there. So a lot going on, a lot of thoughts about what this means for the energy market going forward. But what does all that mean for the markets for this week? Carley, you want to run the folks through the movers and shakers for the first week of the new year, madam?
Sure, let's do it. I'll start with the light side. Number 5, we've got Russell 2000 up 3.76%. Number 4, we have palladium up 6%. This list might as well just be the metals. Number 3, we have platinum up 6.18%. And number 2, we have silver up 6.48%. It should be noted, though, these are basically the types of moves we're seeing each and every day, up and down, both directions. So you want to kind of pull up a chart and look at a daily chart for context, because this is a little bit crazy. Rough rice, we don't have any rough rice traders. I'm not sure how many speculators there are in rough rice, but it's up 8.45%. And this has compelled me to actually pull up a chart and take a look at it. I might do that when we're done.
There we go. We're giving you homework here on the show. But you're right. Outside of the Russell 2000, it's pretty much a continuation of last year's trade. Just buy the shiny stuff and sit on your hands. And you're doing pretty good. But someone did point out on our last show that the rut is up over 5% already year to date, which is kind of wild. 3.75% if you look just since the end of our show last week. So yeah, wild stuff. A good year in a few sessions already, Carley, for the rut. So yeah, interesting stuff in small caps. Are you a small caps fan out there, listeners? I'm curious. Hit us up. Let us know. You want to do a little dark side too, Carley?
Yeah, let's do it. Number 5, we've got the Canadian dollar down 1.04%. And in number 4, we have Swiss franc also down 1.04%. I'm going to make a comment here that's a little outside this topic, but the seasonal low for the US dollar is right around now, and dollar sentiment is wildly bearish. So if and when, well, let's say if there's going to be a reversal of the currencies, it's probably looming here in the next couple of weeks. If we don't get that, then, the trend is your friend. So it's going to be interesting to see how that plays out. We've got number 3, class 3 milk down 1.26%. We have the utility sector down 2.75%, and we have natural gas down 6.83%, which is pretty interesting to see natural gas. Natural gas has been on the map for a little while now, and to be fair, like 360 is pretty big pivot for natural gas. As long as we're trading below that, and the last I checked, we were. Prices might get really, really heavy, and 240 is not impossible. So be very careful. Nat gas might have a little further to spill.
You know, it's a quiet week to the dark side when the loonie and the Swiss franc make it onto our dark side movers for the week, listeners. Let's do a little bit of vol moving and shaking right now, listeners. And for the most part, vol's looking a little bit spicier to kick off the new year with two exceptions. Can you guess what they are, listeners? We'll get there in a second. First, let's kick things off in the land of Treasury yield vol. That's always the highest number on our docket, 78, almost 79 right now, up about 3 points today. That is the high for the week, the low 75.25. So pinning the needle to the upside on the Treasury side. Energy also looking a little bit spicier to start the new year. 60.62 is where we're kicking off the year here on the energy C-vol. It's up nearly 2 points just today. If you look at the trend, pay attention to that as well. It's an interesting little indicator here on the C-vol dashboard, listeners. You could see, of course, 3 days of the past week, it has been effectively vol has come in, and only 2 days, including today, have we seen vol pop. But it's popping hard today, up nearly 2 points. That is the high level for the week, the low 58.67. Below it, we have the ag C-vol hanging out right at about an 18 even, up about half a point today. That is the high level for the week as well, the low 17.57. Below it, we have treasuries coming in on the price vol. So the actual movement, the actual volatility of the underlying in the treasuries, listeners. 4.3 right now. So again, a pretty anemic number, but that's up 0.15 today. That is the high level for the week. And then below it, we have the commodities C-vol. 39.72 is where we're hanging out right now. Kind of unched today, but that is the high level for the week. The low 39.25. So about a half point range on the week for the commodities C-vol. So pretty much we're 5 for 5 here in terms of pinning the needle to the upside. What are the two losers in terms of vol? Well, next up, we have the FX C-vol at a 6.16, kind of unched today, hanging out towards the lower end of its range. The actual low was 6.09, the high 6.4. So not a huge range, but when we're talking about FX, that's still a decent percent move at the end of the day. And at the bottom of our list, kind of interesting, the hottest complex, you could argue, in the markets right now is the metals, and metals C-vol at about a 31 even, off 1.5 points today. A metals vol has kind of been all over the place this week. Got killed 5 days ago, and the last 3 days following that have all been bid up and coming back to earth a little bit today. Hanging out, like we said, at about a 31 right now. The low for the week was actually 30.4, the high 32.5, so about a 2.1 point range on the week for metals vol. So metals vol coming back to earth, and FX kind of interesting. Everything else pinning the needle to the upside for this week. That said, Carley, we've been looking back a lot. Let's look forward a little bit. What product should we kick off with on the program this week?
Okay, put me on the spot.
Pick one. I know you like Class 3 milk. You're all into dairy.
Let's go to the metals.
All right.
Let's rub salt in the wound.
All right, to the metals we go, listeners.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, you know where to go to find the metals. Go to cmegroup.com/TWIFO/TWIO should also get you there. Once you're in that drop down, you're going to go all the way down to the bottom of the list to metals. And then from there, you're going to go to the top of the product family list to precious. And you know what? Because it was just such a wild beast last year, let's kick it off in silver, because why not? Silver, obviously number 2 on the product list there, listeners. Just drop down one below gold. You will find it. Is it an explosive week volume-wise in silver? It's decent. We expect silver to put up around 50,000 contracts on an average week, putting up about 70,000 right now, so a fair amount more. Not exactly blowing the doors off, not 250,000 or anything like that, like we have seen in the past, but also more than an average week. Silver futures hanging out right around 75.5 as we're kicking off the show. Puts it up about 4.5 points just since Monday, which is wild, or about 6.5%. So interesting stuff out here. Carley, obviously silver is a bit of an untamed, unhinged beast these days. What is catching your eye in yet another up week for silver?
It is. So I'd actually like to point out you mentioned that the C-vol for the metals complex is down today. And that's actually a stunning fact, given the fact that silver's down $2. There's been decades where a $2 move in silver was considered earth shattering. And now we think this is like just Tuesday. So really, really unusual times in silver. I don't know if anybody here has been trying to trade these options, but they're very, very difficult to trade. The bid ask spreads wide, even on the most liquid, rounded strikes. The bid ask is 15 to 20 cents a lot of times intraday. So honestly, luckily, I'm not the type to have ever recommended anything in silver. So that's the only positive thing I can say about myself last year. I didn't recommend any silver, and I probably won't ever do anytime in the future. But if I were paper trading, I might look to sell some premium. It's really, really fat, but you have to have nerves of steel, and you have to, have pretty decent sized margin account. I'm not saying anyone should do this, but just as a tip, if you are stuck in a short option in silver, or you have some sort of exposure in silver, the micros are a very, very great product to control your delta, or not control is not the right word, especially in this market, but to hedge your delta. So if you do have some short option exposure calls or puts, and you get into trouble, check the delta on your option and then look to maybe mitigate it with long or short micros. That's the best tip I can give you at this point. Good luck.
Yeah, I think a lot of folks need good luck. Silver, the new meme stock for all the kids out there. They all love themselves a little. So, we joked a few years back, Carley, that, remember mid 2021, there was a big push. There's going to be a silver squeeze. Remember that? After
absolutely.
After like the first round of the GameStop stuff faded, everyone said we're going to do it in silver now. And people said, it's not really the same kind of thing. You can't really squeeze it in the same way. Well, things have changed in the last 4+ years. You mentioned those ETFs adding a little bit of fuel to the fire as well. And now we are seeing silver, let's say at the very least, be pushed to the upside, Carley. So
absolutely. In fact, we've had those kind of false breakouts or potential short squeezes in silver that don't materialize. Literally, I've been doing this 20 years, and it's kind of one of those things that happens every handful of years, and then it never happens. And so, but this time it did. Something was different this time for sure.
Let's see what's different this week in silver. Listen, like we said, a decently active week, even though it is still kind of beginning of the new year. People are kind of shaking off the hangover from New Year's. A lot of people maybe not even back to the office fully yet, back on the trading desk, and yet we're still seeing decent flow. Of that flow, about 38% of it is going up, and the Feb contract has about 19 days to go. So we'll hang out there, listeners. You might be saying, what is the vol right now in Feb silver? It's about a 63.90, up about a quarter of a point right now. So actually ticking up a little bit, which is kind of belying what we're seeing on the aggregate metals C-vol, but not a ton. It's not like it's getting very explosive or anything along those lines. In terms of skew, we're seeing the puts last week, 2.7% discounted. Slightly cheaper this week, 3.5% discounted. Calls catching a little bit more of a bid. They were 5.1% bid last week, 8.1% bid today. So getting a little bit more juice. It's hard to argue with that. I mean, the thing's up 4.5 handles just since Monday, which again, as Carley alluded to, used to be a nigh on historic move. And now it's just an average week in silver. And if you're wondering what is the hot option out there in silver land this week, it's the Feb 80s. Changing hands nearly 3,000 times this week. Looks like the big day was actually Wednesday, about 1,100 going up on Wednesday. Also 1,100 of the 85s going up on Wednesday as well, both closing. So it kind of looks like maybe someone took off a 80-85 vertical, but I did a little digging while Carley was talking. Also today, trading 700 times each as well. So that is oddly symmetrical paper. I'm going to go out on a limb and say it probably was a straight up vertical close, even though I can't find any evidence of a size 80-85 call spread trading today. I do see the strikes trading, and yesterday traded actively as well. I do see them trading separately, the 85s for about almost $3, $2.90, and the 80s for about $4.96. So they could have legged into that vertical as well. It just seems like oddly symmetrical paper. And I think we had talked about these strikes in the past. Someone had put on, I believe, a long 80-85 vertical, so they could definitely be unwinding this. At the time, I think when we talked about it, we thought 80, that's insane. And look where we are now, listeners. 80 is suddenly very, very sane. So, Carley, are you a fan of an 80, 85 vertical in February? And certainly if you had it on, maybe taking it off earlier this week?
Right. It's too rich for my blood. I mean, look at the price of that 80 call. We're talking $14,000 in premium for 19 days in the market. That's really wild. I will say, I don't know what the volume in that strike was this week or today or whatever, but we do have some clients that are using that exact option for hedging purposes. So I suspect a lot of that volume is people trying to manage the increases in margin. I think people are being forced to buy calls. And silver's a little different than some of the other markets. There's not a lot of liquid weekly options. Like if you're talking about the S&P, there's options that expire every day and they're very liquid. Silver doesn't really have that option. So people are grasping for the cheapest option they can get and for the best protection. And it happens to probably be that February 80. So my guess is those are people hedging.
So what you're saying, Carley, is it's all Carley's clients who are slinging these Feb 80s, if I can read between
probably
the
not,
lines.
no.
All her client, no one else, listen. I also saw a little bit of action on the 60 puts. These are going out a little bit farther. These are going out in March, so nearly 50 days, about 47 days, listeners. March 60 puts, 2,200, so pretty close to what we were seeing in the 80s as well. The big day for these was actually Tuesday. In fact, looks like paper was opening on these all week long. Let me look if I can see here really quickly. I see a March 60 double put spread going on. Here you go. March 60 puts traded straight up for about 84, 85 cents. And they've traded about 2,200 times this week, opening all week long. The OI is 2,600 now. So clearly people piling into this strike. I don't know, Carley, March 60 puts 85 cents. Does that sound like an interesting downside nibble to you, or is that too rich for your blood, or maybe not enough time?
It's not really my style, but to be honest, I think we do see $50 silver faster than most people would expect. But then again, I've been wrong on silver, so you can laugh at me if you want. But with that said, I'll say this. There are a lot of people out, because silver's at all-time highs and behaving the way it is. There are a lot of people out there buying puts as a speculation, but it's really difficult to make money with those. For example, today silver's down 180 points, or $1.80, however you want to call it. And that 60 put for March is basically only maybe picked up 2 or 3 cents. So imagine being right by a couple dollars in silver, which again, this used to be a monumental move, and still not making money. So my advice is, and I'm not trying to talk anyone out of trade. Actually, I am. My advice is paper trade silver. Let somebody else make or lose money on that, because I think I've said it on this show before. I've seen people make a lot of money in silver. I've never seen them actually keep it. So I hope everyone that made money keeps it. And if you were on the sidelines, probably stay on the sidelines. Keep whatever you've got in your account. Don't worry about this stuff going on. This is a really treacherous market.
But Carley, it's 85 cents. How can I go wrong?
Right.
It's just a little nibble, 85 cents.
Exactly.
Well, Carley, we can go to gold and keep it in the metals, or we can go to another complex. What do you feel like? I'll let you drive just to make up for your second place finish in the fantasy.
All right. That's fair. Let's go to the S&P stock indices.
All right. To the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the wild, the woolly, the wondrous world of equities. Sling out of that metals drop down. You're going to go up 3 slots to equity indexes in the asset class, listeners. Then at the top of that product family, there's a whole bunch. We're going to go to the U.S. Index E-mini. Then from there, it's an embarrassment of riches. We got the S&P, we got the NASDAQ. Probably going to talk a little RUT, because that one is certainly hot out of the gate to start the new year. But Carley, everyone has the $1 million question, which is, what do you think about equities to start the new year? So I will put it to you, madam. What do you think about equities to start the new year?
Well, listen, the trend is your friend, right? And I don't know what it's going to take to derail this. Everybody, even the bulls, agree it's overstretched, it's overvalued, the multiples don't make sense. But the thing is, trading and investing is a psychological process. And until something changes the psychology, it will be whatever it is, it is. That said, we're this time of year is known for fallouts. Basically, the first quarter of the year, last year it came a little late. It was in April. Early part of the year, if the market is going to correct, it's going to do it during this time frame. So what we're doing, I'm not, unless we get up to like 7,200, 7,300, which is kind of the monthly chart trend line resistance, I wouldn't get too aggressive with anything. But what we've advised our clients to do is just buy deep out of the money puts with lots of time. So deep out of the money March and June puts, and just kind of see what happens. The market doesn't have, for example, I'm not making a recommendation, but I'm just throwing numbers out there. Like if you bought like a March 5,500 put or a June put somewhere in the 4,000 handle, the market doesn't have to get to those prices, and you're spending less than $700-800 to get them. All we have to do is see some sort of spike in the VIX and downturn in the market, and those things come to life pretty quickly. So, if you have some tail risk in your stock portfolio that you want to hedge, that's a really easy way to do it. It's not going to save you from a 2 or 3% pullback, but if we get something really significant, which does happen this time of year, it'll get you a little bit of safety. I don't know. Safety is not the right word. It'll make you feel a little bit better about yourself.
You can sleep a little better at night, and if you get another April 8th, you'll be pretty happy.
Exactly. You just never know. We have on Friday, we could have never imagined what happened over the weekend. So I have a feeling this is how the year is going to go. So,
and the markets couldn't have cared less, Carley.
It's true. They could not.
Wait till we have the 24-hour trading everyone's pushing for. It would have been a different story over the weekend, I think, when all that news was breaking.
I think you're right. I think we're lucky that they did it while the market was closed.
Yeah,
I think that
was done for obvious reasons at that time. They didn't do it at 2 a.m. and the markets are closed for no reason. Obviously, they want to minimize the impact. When that's all of a sudden, when we're all slinging 24/7, there's already talk about, I think it was Kalshi or Polymarket, one of them not paying off on their Maduro bets because there was some talk about some skullduggery. Welcome to the new world of everything is insider trading, Carley. So it's going to be, I'm sure you and I are probably revealing some secrets right now. We don't even know it. So. All sorts of fun.
Right.
All sorts of fun going on here on the show. Let's see if is there some fun out here right now. Carley's talking S&P, but I actually want to jump a little bit to the rut and the Russell 2000. We were just talking about this earlier. It's one of our top 5 movers for the week. It's up 3.75% for the week. If you go out for the full calendar year so far, which is not much, it's up over 5%. So it's just it's a wild year already for small caps. So if you've been in the camp, small caps are due for a little bit of a catch up, a little bit of a come up, perhaps, then maybe you're pretty excited about all things rut right now. As we're hanging out here, 26.15 on that front future. We're seeing about 35 to 40,000 contracts going up in the rut, which is decent. It's not as explosive as we've seen in the past, but again, is that first full trading week of the year. And also, it's way more than we used to see when we talked about rut every week on the show. We used to see 10 to 15,000 contracts in a week, and that was exciting. So we're seeing 2 to 3x that now, which is a decent paper. A decent amount of that going away in a few minutes. You got 2570 puts, a ton of those trading today, 1,025 times. If you were buying those, looking like you're probably not going to be a happy camper today, but we'll see. And then going out tomorrow, we got 26 quarters. In fact, 26 quarter seems to be the option du jour in small caps, and indeed the option of the week. They traded almost 1,000 times expiring tomorrow. They traded another 1,500 times expiring in 4 days, and in 5 days they traded another 1,200 times. So 26 quarters apparently where a lot of the action is lining up right now in small caps, including again today 1,100 of these expiring in 4 days, trading today. So a lot of action. I don't know. 26 quarters. Is that a strike that particularly interests you in the rut over the next week to 10 days, Carley?
That's probably a fair place to be. I will note that I think a lot of the interest that's coming into the Russell, I mean, besides fundamental reasons, which I think kind of obvious, they haven't really worked out as planned thus far, but I think everyone kind of knows why. Fundamentally, people are attracted to the Russell, but it should also be noted that the S&P and the NASDAQ have just ran so far out of bounds that the contract sizes are massive. And I know there's micro versions of those, but the micros are pretty small. And I think there's a group of traders out there thinking, hey, the Russell's like a nice happy medium. For example, notional value on a Russell contract, I think, is somewhere around 130,000 versus the E-mini Nasdaq's about 500,000 and S&P's, I can't, probably about 350. So for position sizing purposes, I think the Russell's a really great place to speculate.
Looks like there was some speculation going on earlier this week. A lot of action in the September 2800s. So if you wanted something beyond what expires in 3 to 4 days, Carley, how about SEP 2800s? They were all the rage on Monday. They traded about 1,200 times. That is all opening. Worth noting, there's about 2,800 contracts open on this strike. So that was more opening paper on top of what was already there. If you're wondering, what does the SEP 2800 go for? And by the way, there's obviously a lot of duration on that. That's one of the longest trades we've seen in equities in a while, especially in this day and age when everyone's obsessed with sub-day trades going out all the way to September. Seems like an eternity. It's almost $81. I don't know, Carley, does that float your boat? SEP 2800s for about $81. Carley, are you going to say sold to you on those?
I'll pass.
You're not going to touch it either way? No fun?
No. I'm boring.
So somebody liking a little bit of SEP upside. You like those, listeners? Is that a strike or a level? I mean, we said it for a lot of other assets like silver last year, some of these seemingly outlandish upside trades, and then bam, we're blowing through those strikes a few weeks or maybe a month or two later. So I won't look askance at any strike in any product anymore, but 2,800, can we get there by September? Seems like such an eternity. We'll be closing in on the midterms by then, listeners. Just a lot of wild stuff out there. Speaking of wild stuff, you know, a lot of people were very interested in energy to start the new year for obvious reasons. Let's get out of there with a real quick stop in energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners. Man, we're packing a lot of living into the show already. We got all of last year. We got this week's stuff. Got a bunch of complexes. Rounding it out here with energy. And if you're wondering, it is a hot week in crude, given all the headlines that kicked things off over the weekend. The answer was yes. WTI hanging out 58 1/3, up net about a point since Monday, or about 1 3/4%. Obviously, when we talked about our movers for the year, crude was one of the downside movers for the year last year, but putting up some numbers this week, 763,000 contracts on the tape. So starting to rival nat gas in crude from a volume perspective. If you're wondering where the lion's share of that action is going up this week, it's in the Feb contract that has only 6 days to go. So very near dated paper. Then again, it's hard to blame them. This stuff is very fluid right now in terms of the geopolitical scene and its impact on the energy market. So about 40% of that flow going up in the Feb contract that has about 6 days to go. Carley, it's been an interesting week on the energy front. Maybe not quite the response people expected once they started realizing, hey, there's a lot more to it than just turning on the spigot in Venezuela. They have to do a lot to make that spigot work again. But outside of that, I know you have some energy folks over there at DeCarley. What have they been up to, and what are you seeing in crude this week?
So you're absolutely right. I mean, the supply that we get from Venezuela is highly uncertain, and if and when we do get it, it's going to take a lot of time. So it's hard to put on a short-term trade based on anything that we're seeing here. That said, we can't ignore the fact that crude oil has been in a bear market for 3 years, well, since March of 2022. And we've seen a total of 4 bear markets in crude oil in the last 20-something years. The last 3 did not end quietly. They ended with massive capitulation sell-offs that kind of put us in a situation where the selling was so severe and so quick that nobody in the world wanted to buy oil. Case in point, 2020, when the market was actually paying people to take oil in a few certain instances. So anyway, my point is, the oil market has never bottomed out quietly, or at least it has in the last 20 years. So maybe this time is different, and maybe it will. But if history is our guide, we probably should see a big wave of capitulation. And ironically, those capitulation moves over the last 20 years have occurred mostly in January, February. In 2020, it was more like March, April. But again, the first part of the year is kind of a danger zone for that sort of thing. So I wouldn't sell futures or do anything crazy like that here at these prices because we're kind of banging on the door of support around 55. But I do think at some point we collapse to around into the low 40s. And believe it or not, if we repeat the pattern that we've seen over the last 20 years, $20, $15 crude oil is not impossible. So I'm not saying it's absolutely going to happen, but I'm saying we should just be aware of such a possibility. And we're kind of doing the similar thing with our clients as we are doing in the S&P. Very low risk trades, limited risk trades, for example, buying December puts in crude oil way out of the money, like at strike prices that nobody thinks is possible. Buying June puts at very low strike prices, spending a very small amount of money, and it's a binary situation. Either it happens or it doesn't. But if it happens, you can get a lot of leverage with a very small amount of risk. And so that's how we're playing it for now.
You're turning into a put nibbler on me. You used to be the upside vertical and bullish risk reversals. Now you're just gobbling up all the puts in town, Carley. Interesting. Yeah. How the worm turns to start the new year. Let's see how that worm is looking really quickly here in WTI list. Like we said, a pretty active week so far for obvious reasons. Hanging out right around 58 and a quarter in that future when we kicked off the show. Again, puts it up about 1 point from about Monday when we saw all these headlines really hitting the markets. Like we said, 40% of that going up in the Feb contract has about 6 days to go. And the active contract out here are the double puts. By the way, 41 vol, what we're seeing out here in the Feb contract. Again, vol getting kind of spicy right now. It shows it up about 14.5 points. Again, vol with only 5 days to go, 6 days to go is kind of a silly metric. Let's go a little bit farther out. Let's go out at least a couple of weeks. If you go out about 2 weeks, listeners, that contract, that vol is at about a 35, 36, still up about 9 points. So obviously there is more vol right now in the crude space for obvious reasons. Just maybe don't get alarmed by some of these numbers you're seeing in the contracts going out in a couple of days. Skew-wise, kind of wild as well. The Feb contract has 6 days to go. The puts last week were 10.3% discounted. They are flat right now. The calls were 18.8% bid and flat this week. So, wow, they were pricing in some serious skew over the course of the past week, and most of that is gone right now. It's almost as if someone was expecting something to go on in the energy markets to kick off the new year, listeners. In terms of action, it is the double puts expiring in February. They've changed hands about 35,000 times already this week. Looks like the big day was actually yesterday. Paper bailing on about 16,000 of them. 6,500 trading today against an OI of about 15,000. So there's still 15,000 left of these things. 7,800 on Tuesday. Looks like paper was bailing on them then as well. And about 4,600 going up on Monday. Looks like they were opening there. If you're wondering what's a double put with about 5 days to go going for right now, still going for about 37 cents today. So they're not giving these things away. So would you be comfortable? Carley, is that a strike you would nibble? I know you don't like a lot of 6 day to go trades, but would you be a seller?
Right.
Would you draw that line in the sand at the 55 level?
55 is a very important number. If we like I've mentioned a couple times, we've kind of been knocking on that number, and we get buyers every time. I suspect there's going to be a time in the near future that we don't get the buyers we're looking for, and the market kind of collapses. So, if I were going to take a shot on the next 6 days, that'd probably be where I'd play it. But then again, that's not really something I would do. But if I were, I think that's a good play.
A little nibble, 37 cents. Carley's buying all the puts. Why not buy those as well, Carley? Just add them to to the gun there. See what fires off as we keep firing off into a little bit of farther off paper. And I know not everyone lives in 5 or 6 days in crude. Let's go out a little bit farther, see if anything else is lighting up the tape. It looks like the March 50 puts also pretty active this week. So a lot of downside, kind of getting back to what we were saying earlier. The initial headlines were, is it interesting for crude? And now, of course, thinking maybe this stuff can't come online for a little bit. 40 days to go is how long March has for expiration. And these 50 puts, again, changing hands, I should say, about 17,000 times. The big day again, Wednesday, 7,800 on Wednesday, mostly opening there. 4,300 on Monday, slightly closing. 2,500 each pretty much Tuesday and today. I don't have prices on these March 50s. Let's look really quickly. And I don't have prices. I had the Feb 50 puts, no March 50 puts on here, but interesting stuff nonetheless. So a little bit longer term downside, a little bit farther out of the money. Maybe that's more up your alley out here, listeners. And then just for fun, because someone's got to play in December, got 2,000 of the D65s going up, listeners. Does that float your boat? Hit us up. Let us know. All right. That music means we have come to the end of a pretty fun sojourn. We covered a lot of ground today, Carley. We looked back at last year, talked about this week, talked about energy, talked about metals, talked about crude, talked about S&P. Did a lot of living in an hour, Carley.
We sure did. I'm proud of us.
You're probably exhausted. You want to go relax now. You want to go buy some more puts. I know you. So before you go nibble on some more puts, folks want to call you up. Maybe they want to do some of their own put nibbling. Where should they go? What should they do?
So you can visit our website at www.DeCarleyTrading.com. You can sign up for a free trial of our newsletters. Check out our services. We offer full service brokerage and discount online trading. We also offer a Substack. So check us out at DeCarleyTrading.substack.com as well.
And is there going to be a big watch party in Vegas this weekend for the big showdown, Packers versus Bears? Weirdly enough, only the third time they've ever met in the playoffs. How weird is that? Probably because the Bears mostly suck.
Probably because the Bears never go to the playoffs. But there, believe it or not, there's actually a pretty big Chicago migration community here. So
a lot of
there's going
expats?
to be. Yes, there are.
What's the hot Chicago bar in Las Vegas?
Well, there's a lot of them. So I'll be on my couch, sitting on my couch watching, but there will be no shortage of Bears fans running around.
There we go. Should be an interesting one. Cheeseheads versus the Bears. Two teams enter, only one can emerge. That's the case for our Vol Deathmatch coming up later this month as well. Check it out on the Pro. And while you're checking things out online, make sure you check out our friends over there at CME. CMEgroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires. That's going to do it for us on this jam-packed edition of TWIFO. Not going to do it for us on the network, though. We'll be back in about an hour after the closing bell to talk all things hot options, a.k.a. Thor. What's lighting up Thor's tape today? Well, you got to tune in to find out. Then we're back again tomorrow to look back some more on the mad year of Vol with our good buddy Dr. Bix, a.k.a. Carley's nemesis. And then, of course, back for all you pro cats one final time for the week to talk some options oddities. Then we're back to wrap it all up with another visit from Thor Odinson before we're back next week all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.